Welcome back to the Mountain Morning Show, and I got to be honest, I'm pretty excited because I've got Travis McGhee here from FuturesANIMal, and I love talking finance. I guess you guys probably know that at this point, but it's always fun to have you here. And
yeah, it's great to be back.
I'm concerned for the future just a little bit, but this is where I'm interested in getting your take on it. The other day I heard that this came from, I think, NBC News. They said that if we're in 21 days with no government, that we essentially will slip back into recession. That's what they're indicating. And I think that you and I have proven, and this is one of the things I want to talk about, is that may not, that's certainly scary,
right? But
it doesn't really affect. It shouldn't. It should affect how we do our investing. But again, if you have a good plan, it doesn't really matter which way the market's moving, does it?
No, not necessarily. And obviously, it all depends on what you're investing in. But the key, as you pointed out, is you have to have a plan and stick to that plan. Now, that's not to say that you can't adjust that plan over time, due to different circumstances, so on and so forth. But you have to have a plan in the first place. And where a lot of people get themselves into trouble, again, and we talked about this last week and the week prior, is going into investing haphazardly.
Right.
And you go, just treating it, whether you're treating it as a hobby or you're treating it as, well, I'm just going to tuck it away and just kind of let it be. A lot of folks over time will find themselves in a bit of a situation,
right?
If they don't understand necessarily what they hold, and adjust those investments accordingly.
Well, and certainly another part of this too, when you look at creating the plan, is to figure out the variables, your age, what your goals are,
right.
some of these things certainly, and of course what the market is doing,
right.
should play a part there too. One of the things that you and I have been doing, of course, that you're probably familiar with now, is that we've been doing a paper trade, a simulation. And on the simulation, we were kind of betting on where the S&P would be, right? And we indicated that it would be between a specific range, excuse me, can't say that, a specific range, and we've managed to, that's actually been working for us. That was our long one.
Exactly, so that was our long one. And here, what I wanted to do with this particular trade, so we stepped outside of the box a little bit. Again,
right.
We've talked about, you have stocks, you have bonds, you have some very common investment products out there that folks are aware of. What I wanted to do with our particular trade was step outside that box, get into an arena that historically has been more reserved for institutional traders, the big professionals, so on and so forth. And
show consumers don't typically get involved.
Exactly, and show folks that retail investors can access this. And the particular trade, the investment that you and I made in this demo account, and again, I'm stressing that this is a demo account. They're hypothetical returns. It's not real money we're playing with here.
As much as that makes me sad.
As much as it makes both of us sad, yeah. Is that there are ways for you to invest in the market to where you don't have to necessarily pick the direction of a single stock.
Exactly.
You don't have to pick, and you and I were talking about this before the show, you don't have to go out and pick an Apple or go out and pick Netflix or pick an IBM to where it might be something that you don't necessarily understand. But you can make an investment and a trade around the broader market as a whole. So you and I are using the S&P 500 future. 500 different stocks that make up the index, and we are basically creating a time frame and a range and saying if the S&P 500 trades between this level and this level, this is how much money I'm going to make in this time frame.
The thing that's interesting about this is that what we're avoiding here is trading with your heart a little bit, right? Because as you mentioned, it's easy right now for a lot of people to go, oh, I've got to get Apple, I've got to get Netflix. That's what all my friends are doing.
Or I've got to get out of stocks altogether. I have to be out of the market.
Another one, right?
Right.
Yeah, I want to bail. This is a bad time. I got to go. The sky's falling.
Right.
And so trading with your heart can certainly it can get a little, well, let's just say trading with your heart's more risky typically. Would you not say that?
Well, yes, it's more risky, but again, trading with your
without
heart,
a plan.
It's human nature again. Is you're more susceptible to making rash decisions. Again, having a plan will keep you honest. But having a trading partner, and again, we talked about a trusted resource, will keep you honest as well. And that was something that we tried to bring to the retail investor as a company, FuturesANIMal, again, was stepping outside the box a little bit, getting into an arena of trading that historically has been reserved for institutional traders, and mimicking the same disciplined approach that, you know, the largest Wall Street banks, so on and so forth, have in their trading.
Big managers, what they're doing.
Mimicking that same approach to the market with a professional broker. So someone there helping you at all point in times make those decisions. You know, and we have risk management profile as a color-coded system that tells you, and this is something you and I have been using, that tells you how your trade's performing. You know, if your trade is not performing well and it's time to get out, the risk management algorithm that we have says, you know, it's flashing red saying you need to
time
exit.
to leave.
You know, so you have the help of different resources telling you, okay, it's okay to stay in this trade right now or this investment right now. Okay, you need to be worrying a little bit. It's probably time to exit the trade, so on and so forth.
Besides the algorithms, though, it's good to just have a very sound, set, specific exit plan. Something that you talked to me about before we did come on air was that you know that if you're going to make, if you stand to make 50% of the potential profit or the planned profit that you had originally set out to make, and you can do that early on, that's the time to get out, rather than to stick it out for another, 50 days. If we can make it in the first, if we're gonna do a 60-day plan, right?
Right.
And in that 60 days, if we make our money, 50% of our money at the first 5 days, time to get out.
Exactly, and that's a plan that I live by, and a lot of the brokers that I work with live by. And by and large, where people get themselves into trouble is not having that plan. Where they do, and here's how it typically works in investing. The retail investor will have a plan to the upside. So if they buy a stock and the stock goes up, we're often too quick to get out of that stock. So what was once an investment, that we're going to hold this stock and that we're just going to kind of let it go and grow over time, what will happen is, you'll get about a month into it and stock ABC will go from $10 to $12 and you get all excited that you've made $2 and then you get out of it. But on the flip side, you buy that stock at 10 and then it goes down to 8. And people will look at it and they're like, well, but it's still a good company. And I still like it. And, I know I told myself that I was going to get out if it went to 8, but it's going to come back. And then the next thing you know, it's down to 6 and so on and so forth. And then you get into this death spiral to where you're tied up on this one single stock that the opportunity cost associated with that, because you're not looking at all the other opportunities out there, you can't even put a price tag on it. So a rule that I have, and this is something that you and I did, so the same time we placed that one trade between, I think it was 1570 and 1810 or something, S&P needed to trade between. I put on another trade at the same time for you and I, and this was more of a directional trade, and I said, on this particular trade, what we needed to happen, it was a November time frame, so we have until middle of November. The S&P had to trade below 1780. And at the time, the S&P was trading at 1690, let's say, give or take. Well, what I did with this is what I wanted to show yourself and the viewers is that, I was hoping that the S&P would trade lower on all the political hoopla going on right now, and it did. And over the course of 10 days, again, hypothetically, that trade was up 4% in 10 days. Now, our investment, we were looking, the max we could have made on our investment was 8%. Yeah. Well, for a time frame of 2 months on that trade, if I make 4% in 10 days, I'm going to get out. And my theory has always been, and again, it's just a disciplined approach. If I make half of my goal, of my investment in half the time, whatever time frame I set for myself in my trading plan, I'm out. No one ever went broke taking a profit.
Exactly.
They didn't.
That's so brilliant.
So
time to walk away when
sometimes
you know
it's just if you've made the money in such a short time frame, even if it's not everything you wanted to make, sometimes it's not a bad idea to take it off the table and start looking for another investment.
See, that's the part that I think makes so much sense to me. We talk about opportunity costs, and when we really look at things from that perspective, things start to make a lot more sense than, again, going with your gut and your heart. And that is that that opportunity now to take that money out early, 10 days in, and to start looking at other things and spend the time to make a measured approach at those as well, and a disciplined approach.
Right.
We have much more potential for continuing to have that kind of success than we do if we just stayed in.
Exactly. It's again, what I'm trying to show with this, again, this particular trade that you and I did is, and it applies across the board. It's not just with the market you and I were in with options. It's in stocks and bonds. Again, it involves having a plan set up, is that you don't necessarily have to hold something in entirety all the way to the end. You can exit at any given point in time, take profits off the table, look for a new opportunity.
Take your losses if you have to.
And that's probably the biggest part.
That's a hard one.
That's a hard one. As humans, it is very hard to admit that you're wrong. And I do it all the time, and it's very painful. I'm not right all the time. And no one is right all the time. There are losers. And by and large, you and I will probably have a loser over the course of the next few weeks as we put a couple trades on.
But we'll get out when we know that it's time to get out.
There's a great, one of the best traders and investors that I know. He's run a couple of large funds, and runs a large fund now. I'm not going to mention his name, but I asked him one time, what makes him a successful investor? How often is he right? I'm like, you have to be right, like all the time. And he's like, I'd be willing to say I'm right probably 30% of the time.
Wow.
So, and in Major League Baseball, if you're batting 300, you're a Hall of Famer.
That's good, yeah.
You're a Hall of Famer.
Yeah.
The same thing in investing, the same thing. The difference is, and there are retail investors that are out there that are right 75% of the time, yet they still lose money. The difference is this individual understands risk, and he can cap the amount that he's losing at any given point in time. He knows when he's wrong, and he's out of the trade. So while he might be wrong on 7 ideas and right on 3, the ones that he's right on, he's letting run longer to the upside, and in the ones that he's wrong on, he's out immediately. So he knows. So again, it's understanding when you're wrong and knowing when you're right, and having that plan in place to when you are wrong, regardless. If you think it's the best stock in the world, if it hits that price level, you're out.
Could it be argued that that also experience is so important, that starting to do this young and starting to establish some goals and knowing what, kind of beginning to know yourself and your habits and making sure that you break the ones you need to is a valued thing that maybe we should be looking at teaching our young people in our homes earlier?
Without a doubt. And a lot of what we are about as a company that I think sets us apart from others is education. We do have an educational program tied into where our brokers and myself, and we educate the folks that come in. And I think absolutely, hands down, as soon as you can get involved with understanding finance, with understanding the markets, with understanding just the basic principles of investing, you absolutely should. I think it's a life skill, and there is a bit of experience, and it is hard to understand, admitting when you're wrong and getting out of investments and moving on and so on and so forth. It wasn't easy for me. It wasn't easy for anyone. And that's a part of what we do too, is that we're not, you don't just come into our firm and go have at it in the marketplace. We attach a professional broker with every one of our clients, regardless if you want one or not. You're getting one. And
so I'm going to get phone calls regardless.
You're getting phone calls regardless. And this individual is meant to keep you honest, meant to keep you there, meant to keep you to your trading plan and getting you in and out when you need to get in and out of investments in a disciplined manner. And the reason we do that is to instill that sense of discipline so that you understand, and it becomes more of a methodical process investing than kind of a buy and hope that things go up.
See, I think I may have equated this before, but I don't know that I have, to physical training. Having a trainer there to keep you in and motivated and on your goal.
It's not to say you can't go to a gym and do it yourself.
Sure,
anybody can. But having a trainer there is going to show you exactly what to do, how to do it, and how to do it every time you go to the gym, consistently. And they're keeping you honest. They're making sure you're showing up at 6 a.m., Yeah, so it's the
like
same.
that.
It's the same thing.
As we look at this next week, what do you think? Do you have any idea what our plan is for trading for our simulation?
Well, yeah. So you and I, with the trade we have set up now,
Right.
again, we're kind of on
maintain that one
on autopilot right
Yeah.
now. Yeah. So that's it. We're on autopilot right now. I want to see how the market reacts in the next couple of days. I think we've got some volatile times ahead of us as this continues to linger, everything that's going on in Capitol
Right.
Hill. And I don't know which way it's going to go. And, I think in the end we will have some resolution. But with that said, the trade that you and I have on, we're going to continue to monitor that. And if we see, now that we're out
An
of the
opportunity,
one,
right.
we have some cash on the sidelines, right? Because we took our 4% off the table. So we have a little cash on the sidelines. I'll keep an eye out, and you and I, and we'll see if we have some new opportunities that pop up. And that's the nice thing about taking some of that profit. Now we have
money to
some
work
wiggle
with.
room. We have wiggle room, yeah. So if something pops up in the next couple of days where you and I see an opportunity, we can jump in on that one.
I always say, because we've talked about, obviously, when you have no plan, you're gambling,
Yeah.
right? That's all that is. But I also, one of my disciplines when I do go to Vegas, so to speak, is I have a winnings bucket. And when I finally have that winnings bucket, I put everything back into my original, like what I started with. That can't be touched anymore. I can only play with that.
Yeah.
And this is sort of that. We're not in entirely that situation, but it is a sense of that. Of now we have that, as you said, a wiggle room. We now have those winnings that we made those. Those are
Right.
That's something that we can actually afford to lose. Certainly.
Exactly.
A very smart way of looking at it.
We have a plan.
Exactly.
Exactly.
Love this. All right, Travis
All right.
McGhee,
Thanks,
FuturesANIMal, and if someone wants to get in touch with you to make sure that they have a good plan, how do they do that?
Yeah, and again, we're open to just talking. Again, so they have my number here. You can certainly give me a call, or you can check out our website, and our number is right there on the website. But we'd love to talk to you and help you out any way we can. So we're always open.
Well, I love the idea of getting young investors involved and making sure that they start to establish some discipline early. I think that's a transferable skill to so many other aspects of their life.
Without a doubt.
Right.
Without a doubt.
All right.
So,
Travis McGhee, thank you so much.
Thank you.
We'll be back with more right here on the Mountain Morning Show. We've got a few more minutes. We might be able to show you a video or two, so come right back.